Good morning, everybody. On the Boy Crypto Morning Show. Today we're going to be taking a look at Bitcoin as it just finally moved. What a miracle, am I right? So, hope you guys are all ready today. Make sure to smash the like button as you come in. Number one thing you can do to help the channel. All right, let's go ahead and get started here. We'll start with CoinGecko. Sure, sound's working. Everything's good. So we just had a move, a pretty big move, pretty significant move. We're back at 3.902 trillion, which is good. Closer to 4 again. 24-hour volume 180 billion. It's meh. Bitcoin dominance up a little bit, 57.7%, and ETH dominance staying about where it's been in between 12.4 and 12.6 for the last little bit. Oh, Zcash, Chain Opera, still on your trending coins here. Have a protocol, I don't know what that is. River and BitLight, 2 went up. Bitcoin right now is coming in $112,867. And as you can see on my FEMAX chart here, don't forget the number one place to trade is FEMAX. We got a link below for you. And we still have a contest. We still have a contest going on for the rest of this month and part of next month. So make sure to use my link to sign up. And I'm not saying that because I get the money from it. I'm just telling you because you just never know with restrictions in place on certain countries. You tried it before. I would just suggest trying it again with my link. Might be something special there. We're at 113,153. This candle started at 108,390, and 2 candles later, we're up like 4%. Well, maybe not. Maybe this says different. This says we're up. Yeah, 3%. That's pretty good. And Ethereum is at 3.7% the last hour. So really starting to move. Binance Coin starting to move. XRP, Solana starting to move. This is good news. Let's check out the biggest winners of the day. Or let's check out the biggest winners of the hour. Athena, Pudgy Penguins, Zcash, Hondo, Render, Sui, all over 4%. Arbitrum, Mantle, and Sai as well. Algorand, how's this thing holding on? So it's still at number 78. I'm surprised. It would probably be lower by now. And by lower, I mean higher. I thought it would be out of the top 100 soon. Are any of you guys all in on Algorand? Anything positive about them you read online probably is paid for. So, but anyways, I digress. It's good for the day. Chain Opera to number 84. It's down 10.5% for the last 7 days, but up 51.2% for the last 24 hours. Market cap is at 1.52 billion. Wow. Here's that proving its blockchain again. Moving again. And Zcash still crushing it. Number one gainer for the month by a considerable margin. The Tensor coming in number 2. And for the last 24 hours, Athena. So Zcash is really running. Let's see if we can. Why is Zcash running? Up 750% this quarter. Bottom likely in. Zcash has a halving in November. Interesting. Your Silicon Valley friends, they want everybody to be on Zcash, apparently. Okay.
Weren't we supposed to about Zcash?
Everybody's posting about Zcash.
Privacy.
Yeah, it's very interesting. Why is Zcash up though? Why? Nobody knows. Let's see. A shielded pool. Yeah, this is from Zcash on Twitter directly. Privacy is normal. That is true to some extent. Wow, this is just really interesting stuff with Zcash. Never saw this coming. I've known about Zcash since the very beginning of Zcash. It's a privacy coin. So what other privacy coins are in the top 100? Monero, of course. Where is Monero? Number 35. So if you're looking for something to compare it to, like you could look at Monero. Monero has never recovered its all-time high from December 2017.
There's some discussion of building a DEX on Zcash, though.
Building a DEX on Zcash?
Yeah.
Well, I guess, is that what the shielded pools are?
I'm not sure.
Interesting stuff. Okay. Let's go back here and look at the biggest gainers of the month. And once again, there it is, Zcash. Zcash having the best hour, 24-hour, 7-day in a week. Seems pretty good. All right. Man, I just missed this long too. I really almost took it long there. There's high volume right now. So maybe this move is legit. Maybe it's legit. All right, guys. Obviously, it is overtaken $113,000 now. Bitcoin jumps, retakes 11,000, leading crypto stocks higher as markets stabilize after October sell-off. Bitcoin jumped Monday to retake the $111,000 level yesterday, giving crypto stocks a boost and lifting hopes that this month's jolt in markets was a speed bump rather than signaling a broader turn in the cycle. That's certainly what we're hoping for. We're hoping this was a speed bump. Bitcoin is currently in a reaccumulation phase following a short-term correction, with market sentiment stabilizing and institutional demand remaining resilient. Along with Bitcoin's rise, Strategy stock gained more than 2% after the company disclosed about 168 Bitcoin at an average price of $112,000 between October 3rd and October 13th and 19th, excuse me. The company's SEC filing on Monday showed it now holds a total of 640,418 Bitcoin with an aggregate purchase price of $47.4 billion. Wow. Trading platform Robinhood and Coinbase jumped nearly 4.5% and 2.5% respectively. Crypto mining companies, who also focus their powerful infrastructure networks on AI and high-performance computing, were soaring as well on Monday. There she is. World's loveliest lizard. Okay. Lysandra. Here's something. BlackRock's IB1T, IBIT, goes live in London. First hour volume hints at growing UK Bitcoin appetite. They got to get these have got to start getting really creative. The tickers. Okay? How can you put bit or BTC in everything, and everything have a different ticker? I don't know. Okay, first hour volume hints at growing UK Bitcoin appetite. Freedom of Bitcoins. By launching its iShares Bitcoin ETP, BlackRock is officially moving Bitcoin from a fringe digital asset to a regulated mainstream investment for UK retail investors via the traditional London Stock Exchange. BlackRock's long-awaited iShares Bitcoin ETP, IBIT, made its debut on the London Stock Exchange on Monday, allowing the United Kingdom users to be exposed to retail assets. Here it is. $8.30 a share. Product allows retail investors to gain regulated exposure to Bitcoin without directly holding the asset. Notably, this is made possible by the Financial Conduct Authority's, or FCA's, recent decision to lift a multi-year ban on crypto exchange traded products. We covered that story a couple weeks ago, or maybe last week. Within its first hour of trading, the physically backed product, custodied by Coinbase, so over 1,000 shares change hands, indicating a cautious but growing interest among UK investors in regulated Bitcoin exposure. The FCA's August policy reversal effectively reopened the UK's crypto investment market. So maybe that's some of what we're seeing a little bit last couple of days of movement. While the trading volume remains modest compared to U.S. figures, analysts say the launch is symbolically important. It positions London, which was once cautious toward digital assets, as a re-emerging hub for regulated crypto finance. With global spot Bitcoin ETFs inflows surging and regulatory clarity improving, BlackRock's London listing may mark the beginning of a new chapter for crypto participation in the UK, while also extending its footprint globally. Let's see. It's already listed across several European markets, including Germany's etc., Euronext Amsterdam, and Euronext Paris, before making its UK debut. Wow. He said that IBIT is on pace to become the fastest ETF in history to reach $100 billion in assets, potentially surpassing Vanguard's S&P 500 index fund. Reflects growing institutional acceptance of Bitcoin. According to BitBo data, Bitcoin ETPs now hold more than 1.35 million Bitcoin, representing 6.47% of the current crypto's total supply. Wow. Let's see. The FCA's reversal, effective October 8th, has been widely seen as a turning point for UK crypto policy. After years of caution, the regulator accelerated its review process this year, cutting approval times by nearly 2/3. Wow. The debut of IBIT indicates a shift in the UK financial policy that could normalize crypto exposure within traditional portfolios and attract a new wave of institutional and retail interest. Analysts say the move could pave the way for more issuers to enter the market, with London now positioning itself as Europe's next crypto financial hub. Notably, other rivals like 21 Shares and WisdomTree also launched similar Bitcoin and Ether ETPs for British clients, suggesting that competition and liquidity are about to heat up fast. So there you go. So UK going bullish on crypto. Rare earths mining is having a crypto moment. Beijing's new restrictions on rare earth materials ignited a political and economic firestorm. The latest trade rift generated a surprising upshot, an American company jumping into the rare earths mining business. Cleveland Cliffs, or CLF, the Ohio-based steel company, is already exploring the activation of rare earth material and has identified 2 promising sites. The company announced on Monday. Investors scrambled to get in on the resource play, saying shares up by more than 20%. Sudden excitement over mining is something that we've heard before, only this time it's literally mining. It's literally mining. Simply gesturing towards this will really confuse people on Bitcoin mining for sure. Simply gesturing towards a pivot amid a charged moment is enough to really get the market going, bringing to mind the heyday of corporate pivots to crypto, blockchain, and AI. After Monday, investors may be eyeing further miners for the next announcement. While the mining language pivot and timing fall into a neat parallelism with crypto, it's clearly different than whatever we saw during the Long Island blockchain era. What is the Long Island blockchain era? In 2017, Long Island Iced Tea Company said it's pivoting to blockchain. Its stock soared more than 400%. What in the world? This was 2017? That's crazy. I guess they're the original Michael Saylor. Wow. Okay. Close ambition signals a new period of corporate nationalism. If trade conflicts will come to define the first year of the second Trump era, executives pinning their own priorities to national imperatives is one of 2025's biggest themes. Pulling in the same direction as the president has distinct business advantages. If successful, it would align Cleveland-Cliffs with the broader national sense. So here's what they're saying. What they're saying is if you are the first to create a trending niche, I guess you would say, if the president is in support of it, then you're going to do well to jump in on it early. So sure, he's all for this mining here. Seeing the playbook, it's working. Cliff is operating in the mode of NVIDIA, Whirlpool, much of big tech and U.S. manufacturing in general, acting their business as an instrument of American competition and technological sovereignty. This is all because China basically put in restrictions on rare earths, and that's why Donald Trump did the tariff threats. There you go. Coinbase acquires crypto fundraising firm Echo for $375 million, but the platform will stand alone. Let's just look at it real quick. Go. Coinbase. Huh. Does it not have a website? It's a platform. It's on chain. So I guess I can't find it here. Coinbase has acquired Echo, a startup focused on on-chain capital formation for approximately $375 million. Founded by a longtime crypto figure, Echo has helped projects raise over $200 million across 300 deals since launch. The platform allows startups to raise funds directly from their communities, either privately or through self-hosted public token sales, using a product called Sonar. Coinbase said the deal would help it build a full-stack solution for crypto fundraising. For startups, this means easier access to capital and tools to align fundraising with their user base. For investors, it opens the door to early-stage opportunities that were often gated behind private networks. But Echo will remain its own platform. Wow. So there you go. Tom Lee's Bitmine immersion adds $800 million of Ether, bringing ETH holdings to over $13 billion. Bitmine Emerging Technologies, the Ethereum-focused digital asset treasury company led by Fundstrat's Tom Lee, as I like to call him, extended its Ether buying streak over purchasing over 200,000 tokens, 200,000 ETH, worth $800 million through last week. After the latest purchase, the company held $13.4 billion in combined crypto, equity, and cash assets as of Sunday evening, said in a press release. It includes $219 million in unencumbered cash, 192 Bitcoin, and a $119 million equity stake in 8 holdings. The ETH portion accounted for the majority of Bitmine's holdings, now standing at 3.24 million tokens, worth a bit over $13 billion at current prices. That's about 2.7% of the total ETH supply, with the firm's ambition to raise 5%. Bitmine stock gained 8% as crypto prices modestly bounced over the weekend. The latest purchase means that the firm bought roughly $1.6 billion in ETH over the past 2 weeks as crypto prices tumbled, culminating in a dramatic crash on October 10th. The company saw the correction as a buying opportunity, as the price dislocation represents an attractive risk reward. They also said last week the bubble of digital asset treasury firms might have already burst, with many recently launched companies trading below the net asset value of their holdings. BMNR is still holding on to a slight premium to its holdings, BlackRock's data shows. So this BlackRock's, it just kind of shows a little bit about all these treasuries. Here are Ethereum treasury companies, aggregate ETH holdings. And here, as you can see, the ETH holdings by company. You can see the blue line here. That's Tom Lee's company. So it's heavily above the rest. Here's the trading volume. You see their trading volume just dwarfs everything. This is the market cap. See the market cap. There was one at some point. ETH had a higher market cap than it briefly, but nothing else is really close. So anyways, $20 billion liquidation that just shattered crypto's Pumptober dreams, and why this wasn't just bad luck. Here, this is kind of a negative story. This hit pretty well when it was written yesterday, but now we're all the way back up at 113. Crypto market just experienced what traders are calling the worst liquidation event in history. A flash crash so severe it made the FTX collapse look tame by comparison, wiping out $20 billion in leveraged positions and leaving retail investors questioning why the house was rigged against them from the start. Not if you weren't over leveraged. Bitcoin plummeted $10,000 in minutes during trading hours on October 10th, while altcoins suffered catastrophic losses ranging from 50 to 75%. For context, while a $10,000 drop represents less than 10% when Bitcoin trades at $125,000, the crucial factor was the speed, dropping over 5% in less than 10 minutes. What made the crash nearly 10 times worse than previous liquidation events wasn't just bad luck, it was a market structure designed to fail spectacularly under pressure. Crypto space had not experienced a significant downturn for Bitcoin longs in months, with the market maintaining substantial long positions while Bitcoin bounced between 108 and 120K. That over-leveraged positioning became the biggest piece to the puzzle when the crash began. Recent regulatory changes compounded the problem. The Trump administration's decision to allow leverage. The Trump administration's decision to allow leverage trading capped around 10x to all traders at centralized exchanges gave retail investors unprecedented access to tools they could use to amplify both gains and losses. The result? Widespread wipeouts among inexperienced traders who didn't understand the risks. Popular Pumptober narrative had encouraged investors to be unanimously long, potentially setting them up to be front run during the crash. Combined with Bitcoin's recent all-time high heading into a low-volume weekend. The market was primed for a technical correction, but few anticipated the severity. Oops. Timing of certain trades has raised serious questions about market manipulation. We know about the Trump insider whale that made these positions just minutes before news was made publicly available on that. Precision of that positioning suggests insider knowledge that most retail investors never had access to. The structural problems run deeper. Centralized exchanges have access to data regarding all long and short positions, effectively enabling them to capitalize on liquidation events as a zero-sum game, critics argue. When exchanges see exactly where stop losses liquidation points cluster, they possess information that could theoretically be exploited. The crypto market remains unregulated, meaning manipulation exists in a legal gray area. You can't manipulate an unregulated market. It's all fair game, what one Reddit user said. Beyond the stats and accusations lies a darker reality. Traders described watching people's life savings disintegrate in minutes as soul-crushing, with many newcomers potentially panic selling and swearing off crypto forever. The incident highlights fundamental tension in crypto culture. Should investors who use leverage shoulder full responsibility for their losses? Or does the system bear some blame for making dangerous tools accessible while operating without meaningful oversight? I mean, that's the problem in a nutshell right there. It's the people, if they didn't understand the risks, then certainly it's on the trader. But some of these people got wicked out and it went right past their stop loss. You got to remember that too. So I'll always go for isolated margin instead of cross. Some argue these investors acted out of ignorance or desperation, gambling for a better future, of course. For those who survive with capital intact, the crash serves as a brutal reminder that in unregulated markets, the house always has better information, and that edge can prove devastatingly expensive for everyone else. So, in the chat over here, you guys must not hit the like button. You lost 30K on BitUnix and they gave you 16K compensation. I told them I couldn't log on because the site was down. Wow. Well, at least they did something. You know. Let's see. Gold going down and Bitcoin going up. Well, all right, guys. That is all that we have for today. Appreciate you guys watching. Appreciate my mods. That's all I got. Be blessed. Well.